Hello, today is Saturday, August 22nd, 2026. Here is your daily signal. According to Fortune, U.S. Treasury Secretary Scott Bessent has embraced a highly interventionist approach, unveiling a $250 billion emergency bond buyback to calm volatile markets amid rising national debt and fiscal uncertainty. Bessent's appointment in July 2026 marked a shift toward more unconventional strategies, as the Treasury moves to stabilize bond yields and support government financing during a period of escalating global rates and widening deficits. Recent actions have included signaling potential changes to debt issuance schedules and pledging increased cooperation with the Federal Reserve, which itself has committed to supporting secondary market liquidity. Major U.S. banks like JP Morgan Chase, Citigroup, and Bank of America, as well as congressional leaders from both parties, are closely monitoring these interventions. In addition, international credit rating agencies may soon reassess U.S. sovereign ratings based on the expanded market operations. The buyback aims to restore near-term market confidence, but could bring higher borrowing costs if ratings are downgraded and set a challenging precedent for future policy normalization. Moreover, these extraordinary steps may prompt international investors to re-evaluate the safe haven status of U.S. Treasuries after sustained interventions. Next, let's look at the pressures and policy changes affecting the U.S. retail sector. Target has posted its second consecutive turnaround quarter, thanks in part to a nearly $1 billion tariff refund, while Fortune notes Walmart's sales growth has dropped to a 6-year low as middle American shoppers protest rising prices. Tariffs on imported goods have substantially reshaped cost structures for retailers like Target and Walmart since 2018, pushing both brands to revise refund policies to manage increased returns and shifting consumer behavior amid inflation and supply chain strains. Walmart CEO Doug McMillon emphasized that new 2026 tariffs on electronics and apparel from China have elevated average shelf prices by 2.5% year-over-year, and Target recently shortened its refund window from 90 to 60 days, citing fraud risk and economic headwinds. Companies including the U.S. Trade Representative and Department of Commerce help steer these outcomes, while trade partners like China and Mexico heavily influence tariff effects. Near-term, shoppers are feeling increased prices pressuring the quarterly performance of these retailers. Continued economic and tariff pressures could accelerate layoffs and automation, and if tariffs endure, market share may shift toward discount and online retailers. Policy changes or trade negotiations could dramatically alter retailers' strategies before year-end. Moving on, we examine AI adoption within top enterprises. TechCrunch reports that OpenAI is steadily closing the gap with Anthropic among business users, as new data shows companies are frequently switching between AI providers in response to new releases and model improvements. The acceleration of enterprise AI began with OpenAI's GPT-4 launch in 2023, followed by Anthropic's Claude 2, and has prompted ongoing evaluation of reliability, cost, and safety, alongside privacy regulation alignment. Microsoft and Google have adopted both models in their cloud offerings, with switching often driven by fluctuations in performance and pricing or expansion of commercial API access. On August 22, 2026, Microsoft Azure expanded support for Anthropic's Claude 3 due to demand for enhanced model safety, while Google Cloud released a comparative dashboard to make switching easier for enterprise clients, and JP Morgan Chase reported a 35% rise in workflow switches between OpenAI and Anthropic during the month. Enterprises from JP Morgan Chase to Fortune 500s are negotiating for lower prices as competition heats up, spurring both labs to make rapid improvements. In the medium term, frequent switching is expected to push stricter AI integration standards and promote greater interoperability. This trend reduces the risk of vendor lock-in as cloud platforms back comparative dashboards and API compatibility, ultimately driving both OpenAI and Anthropic to iterate faster on safety, privacy, and performance. Now, onto the markets. International markets rose, with Germany's EWD up 1.46% and Spain's EWP leading with a daily gain above 1%. The Netherlands showed steady progress with EWN advancing 0.70%, while Arab Emirates dipped slightly as UAE fell 0.31%. Commodities saw strong upward moves. Gold surged 19.5% this session with GLD and uranium shot up 5% as URA marked one of the day's largest advances. Agriculture slid 0.2%, weighed by DBA. In U.S. sectors, the S&P 500 index SPY moved up 0.4% and healthcare Roman 45 outperformed with a 1.3% increase. Finance XLF rose 0.93%, while semiconductors stocks slipped 0.44%. Among favorite stocks, Adobe gained over 1% and Microsoft moved higher by 0.4%, although Nvidia dipped 0.98% and Apple fell 0.6%. Leading gainers included RF Acquisition Corp Roman 2, up 226%, and TMCWW, up 97%, while Megan Holdings Limited dropped the most, down 97.6%. That's it for today. You can find more news and details on our website. Goodbye.